Hey, this is Randy Finney with Right Side of the Chart, and this is a mid-session update for Thursday, January 29th, 2026. It's 11:43 a.m. Eastern Time now, video number 2 of the day. I've often said, when volatility picks up, that's when traders, at least and I imagine most traders, make their money. Volatility is simply, you can look at the VIX, kind of get an idea. And when the VIX is low, volatility is low, which it's been. Remember, we've been, the stock market's been in a trading range for months now, still is in that trading range. But the VIX is kind of gives you an idea where volatility is. And I've said this often over the years, and I'll repeat it, that, the vast majority of gains as an active trader, when I'm actively trading, there's now, don't get me wrong, there's swing trading and active trading. Swing trading, that's what I define as holding periods. They're typically measured in weeks, let's say around 6 weeks average, but some of those trades are explosive. If you follow me for a while, sometimes we hit them on the first target for a double-digit gain in the first day on a powerful breakout. Some trades go on for months. We have like Visa right now, and some other trades we have that have been on for months, have hit multiple targets, but are waiting, to break for the next level. So again, swing trading. There's active trading, swing trading, and trend trading. Those are the three types of things I do. Trend trading is closest thing to investing, really, that I do personally, where the holding period is measured in months or years. Swing trading, again, typically measured in weeks to maybe a few months. Active trading measured in minutes or maybe days, right? So when volatility is high, I will start posting some active trades. Now, I cannot, absolutely, it's impossible to post all of them. There are times where I'll trade the NQs literally a dozen times or more long, short in a day. That's with extreme high volatility, just bouncing off levels, trying to get 1%, 2% here, there, 3, maybe even a 0.5%. If you trade futures, I don't have to tell you how much that puts in your pocket just to get a half point on NQ on a day trade. If you do it, in a few hours and you get a half point or 1 percentage point, then, sit back, wait for the next opportunity. And then weeks and even months go by before you get these periods of frequent trading. So either way, in the recent videos, and I'm doing another one now because volatility is picking up. And again, this is when an active trader, if that is your wheelhouse, your skill set, your comfort level, can make some pretty quick profits in short order. And if it's not, I can tell you this, you will get chopped to pieces. So, when I see opportunities that I can get out there, I'll post those. And I'll give you one chart in the comment section below the last post. And I'm just going to go over really where we're at with the market. So the VIX is waking up. And as I pointed out, we're coming off a divergent low. I told you there's a lot of potential, especially. And guys, this goes back to the first video of the day I did. There's still some additional check marks, and we still have Apple. For this week, Apple will be it. That's the last of the big potential market moving events we're going to have this week. Typically, Friday you don't have any important earnings that ever report on Friday before the open, and virtually none after the close. So, but that's it. So today, after Apple reports, and whoever else that might move the needle tonight, Apple's a big one. And then that's it. Economic reports are usually thin, if any, on a Friday. So there's not a lot other than anything that may come out of Trump's mouth that can really move the market between now and next week. Or I'm sorry, between after the close today. And of course into tomorrow, depending what Apple does. Apple has the potential to, take the market up or down. Obviously, it goes without saying, right? All right, so let me just jump in here and go over kind of where we're at now. And again, the upside potential on the VIX is, as I said the other day, pretty big. It's already up, 12% today. I'm looking at VIX futures. Depending on the contract, the VIX futures are up only. The front month, I think, is up about 4% right now, but it's already given back some. We've already had the turn. Let me get to the charts real quick so I can make it a quick video and give that to you. All right, so the NQ chart I gave you earlier. Okay, this site is typically geared to swing trading and trend trading and investing as well, longer term analysis on the charts. Every now and then I'll, if it's a quick trading up, this is not for everyone. I'll just share it under the most recent post. So what we had here, and I'm going to go over the charts of the Mag 8, is a drop to support, a pretty nice support level. If you go back in time, I'm just going to highlight what makes that a support level. What I'm highlighting are reactions here with this tool. And you can see I have a lot of lines, and each and every one of them are support levels. So there's a couple factors that come into play. Why I would reverse here, try to game a bounce. It is a combination of this chart, the S&P 500 futures, ES, SPY, QQQ, and then all of the Mag 8 collectively. The more that hits support at any point in time, even if which I do still favor more downside in the coming weeks to months, nothing goes straight down. And a big takeaway too is the percentage drop in taken in context with Apple. And what I'm doing, guys, I'm throwing out a lot. I'm just showing you kind of how I trade and what I've learned over the years. So a minute ago we were down over 2%. Let me just measure it here. Here's how you can do it. You take the 1 minute chart. There's yesterday's close right there. Nope, right here. I'm sorry. There it is. So we were down 2.35%. Okay, from experience, yeah, Microsoft kind of punched the market in the gut today, but yeah, Meta is having a great day, still up 9%. Gave back some of its gains, but the market seemed to focus on Microsoft, and some of the other ones are down in sympathy. And Tesla's down, but not too bad after earnings. But where I'm going with this, Apple is still, always has been, if you want to say the single most crowd favorite, most beloved stock in the last couple decades, hands down it's Apple. NVIDIA dethroned it in the last couple years. Alphabet just by now is bigger in market cap, kind of took the lead recently. They leapfrog each other. But again, if you're going to pick one stock that's the most darling of Wall Street, it's Apple. And they report tonight. So my point is, you're not going to usually see any extreme move in the market in either direction. It's going to be a mean reversion because most people hold off to see what Apple does. So that in itself tells me when you get a 2.5 or nearly 2.5% drop before Apple reports, you want to buy that dip. Just as a mean reversion trade, not and look, if you're, again, I'm going to lighten up before the close today, obviously with Apple, because it can go either way. And then again, taking collectively all these together, let's just drill down to the 60-minute charts, one of my favorite swing trading time frames. It should be up there. No, it's not. Borrow you, duplicate you. That was a divergent, almost it's what I call an ADH. I put a little A, almost divergent high, almost an equal high, steep divergence on the indicators. And this is, and NVIDIA, remember, has very, very much been into trading range. So look for these divergent highs. That is a divergent low right there. I don't have it labeled as such. I'll borrow you. But you can see I have them marked. And this is again, my favorite swing trading time frame. Divergent low, drop. Divergent high, drop. Divergent low, rally. Divergent high, drop. It's not marked, but I can see it right there. A little divergent low, rally, right? And that's it. So where are we at? Fast forward, you can see the rest. We don't have, we actually did, I'm looking here. I take that across. Yes, we just put an equal high. This last one that gave us a drop was a divergent high. I'm going to duplicate that. And, basically giving you real-time analysis. So I look at the charts. I always say they're dynamic, constantly changing. That was a divergent high. So I expect more downside here, and that'll probably come after Apple. However, in the very, very near term, this is a line right here, 186.34. Pop-up box tells you I created that line back in literally May of 2022. I might have tweaked it. Yeah, I did tweak it since then. So whether I moved it an inch or more, update it last on January 8th, 2026. But what it is, most importantly, it's you can see a lot of reactions. There's gaps, there's reactions from above, major reaction high right there. Very, very good support, a whole shelf of support. Then that support was broken, but then it was tested again. There's gaps around there. It's a support level. And so you have NVIDIA falling to support. I would be not floored or shocked, but surprised if we just went through there like a hot knife through butter, especially with Apple on deck. So again, I'm looking for a little reflexive bounce, and I think we'll go down. This divergence will play out for the next leg down. Probably take NVIDIA closer to the bottom of its multi-month trading range, which again is right here in that box. That's where I think we're going longer term. But in the next few hours, maybe, if we can get a little bounce, a little more upside. I'm not looking for a lot. I give you that chart on NQ. Where is it? Right here, reversed right here at support. Just looking for a little profit taking into the close, and more so. Let's get to the Mag 8. Let's start with just the big one, Microsoft. Okay, Microsoft. This drop here, I'll try to quantify it for it. Well, I'll tell you right now, 12% drop. Okay, clearly one of the biggest drops of Microsoft in many months and maybe even years. Okay, and last night I turned the TV on. That's the few times I'll watch CNBC. Usually the Fed meetings. I didn't watch this Fed meeting on part. I knew I didn't. There was nothing that Powell could have said or did that would have changed anything. In fact, a friend had texted me earlier in the day. Hey, you waiting for the Federal Reserve meeting tonight? My reply was, here, I'll read it to you. I'll pull my phone up. I don't do these video things. I don't have a camera on my computer. Okay, so here's my reply. Some of them I said, nah, Powell isn't going to do shite today. Let me just, for lack of a better word. Don't get me wrong, there's always post-FOMC volatility, but the big move in the market will depend on the first of the Mag 8 stocks that report tonight, Microsoft, Meta, and Tesla, and then tomorrow, Apple, and then the remainder, and then the remainder in the next week or so. A little typo there. So that's it. So, I figured the Fed would be a non-event. It wasn't. This is what is the market's focused on right now, these big tech companies. And so, okay, back to where I was going. So this trend line on Microsoft, it's not a little insignificant trend line. It's the same one here. I had to zoom out to a 2-year chart, but this is my trend line. It comes off the lows back in late 2022. Microsoft and a few others bottomed in October or November 2022. And this is where, went hard, aggressively long and bullish because the majority, the others that didn't put in divergent lows at support, hit my long-term price targets. And so that is again, a very significant trend line. And I would be, again, my jaw wouldn't be on the floor, but I'd be very surprised if they didn't come in and buy it, even if they cut it under intraday, only to park back above there. So again, I was very clear. I'm just looking for a reflexive bounce. That was a divergent low right here. I shared it as the best looking of the setup, short term at the time, but only looking for a pop. We broke out. We gamed every penny of it. My strong suggestion was to close out due to earnings there, and then had the arrows going there, and that's where we're at. So I'm just putting in my head how, you can kind of get in front of turns before they happen, because that is really nice support. And I would be very surprised if a lot of professional traders and technical traders, both, pros, institutional traders and retail traders alike, don't buy it. And then there's others that don't even see the charts the way I do. And they're going to say, shoot, man, Microsoft's down 12%. I've been wanting to get this one in a while. We're still in a bull market. We're right off all-time highs, fresh off all-time highs in the S&P, and still within spitting distance of new highs, including the NASDAQ, relatively speaking. And you can buy Microsoft for 24% cheaper. The stock has been cut by nearly a quarter since this divergent high right here. So it doesn't mean it can't go down more. It just means the odds of the dip buyer stepping in. Plus, look at this big old gap right here. You take that line across. Look at that. It's a first test of this gap, which has never been tested since it happened back in April. So that's another great support level here. I need to add that. I should have. I was just looking at the trend line. I've noticed that gap before. I should add a line there. There it is. So that's it, guys. Hard stop. It either works out or doesn't. So when you do those, you stop somewhat above. If you like Microsoft, you buy it here. The same divergence I pointed out last week, Friday ago, a week ago. Tomorrow, that divergent low there in the bullish roll is still intact. It's just even bigger now. Draw that line a little longer, a little bit further. And so this could be the catalyst, potentially for new highs in Microsoft. Now, I don't think so, because I look at the weekly charts that tell me where we're going longer term, and they all sing the same song to me. I haven't changed my tune on Microsoft back here or the market. This is an extension dropped, divergent high, went down. We made a margin move, still divergent high. These arrows you can see I've drawn here, last updated back on August 4th. And so from there, I had Microsoft going down to here before any significant reaction. It's lost to 200s. There's their arrow breaks, or line breaks. And this is where I think Microsoft's going. And I know I'm in a tiny minority. I know people think I'm smoking something when I call for a drop of 65% Microsoft. I don't care. I do what I do, and and I study history and I go back, and that's why the charts are a guide. And if you think Microsoft can't drop 65, then I guarantee you, if you were trading back here, you would have thought and said the same thing, and it dropped 66%. Then I guess that's from here to here, 60%. Over here, dropped 39%. And so this is still, nothing's changed. I've had these long-term targets here since last couple of years. This is a very toppy looking stock, and it meshes with what I see on the markets. But again, I'm going to just reiterate. See this trend line? Again, not touched since created back on August 10th, 2025. It's a beautiful trend line. Look at all these reactions early on, reactions here, these major lows, reaction there, and right there. So that's it. Guys and gals that are glass half full folks, meaning looking for new highs and beyond in the market in a great 2026. If you don't buy here, when do you buy Microsoft? Again, assuming you like Microsoft. I'm just looking for a bounce, and then I think this trend line will be taken out. Then when this level goes, that's my lights out level, because the trend line will have given way, and that 352 support is it was a previous all-time high there. It was successfully broken out and back tested successfully. When it goes, it means this whole thing is a failed breakout, which, based on my read on the charts and economic indicators and all the fundamentals that go into play that I don't talk about every day, I expect this level to break sometime, most likely in 2026. Whether it's this month or 6-8 months from now, right? That's when I expect it. And if it doesn't, guess what? I'm certainly not going to be riding Microsoft short. If it goes up, bounces off this trend line and puts in another high, I certainly won't be riding the Qs short that far. But I'm just, again, I know I'm beating a dead horse here, but I'm showing you Microsoft at very good support. The first test of the supports it said. Again, a level that ultimately I think is going to go. That's why I don't want to get too cute. I'm not going for a double, triple, or home run on the long side, just looking for a reflexive bounce. On this 60-minute chart right here, here's my 60. I already had that gap marked right there. There's the bottom, top. Slight with what I call momentum fueled overshoot, and that's it. So I would be, again, surprised, not shocked, if they didn't come in and buy it. And so far, look, right or wrong, I'm right. That's a reaction. A reaction I define as one of two things. If you've followed me for a while, you know I have what I call the hacky sack reaction and the tennis ball reaction. And that says if you drop onto a concrete or tile floor, if you drop a hacky sack, it's going to hit the ground and stick. It's full of sand, right? For those of you who don't know, that's a little soccer thing. You have a little ball full of sand. You play around like a tiny little soccer ball, and that will hit and stick. That's a reaction because you're going down, and an equal but opposite force has stopped it. And then the other type is the tennis ball reaction, which is a bounce. And sometimes you get a little of both, a little bounce. So this is a reaction. We went straight down, and we pretty much stopped right here, right? Okay, so that's it. So I wanted to say that just one big stock with enough buying pressure, or at least cessation of the selling pressure, can help make the case for the bounce. In other words, I usually won't reverse out of short trades just because the Nasdaq's at a minor support level or the S&P is. I want to see at least one, if not more, and that's why I'm doing this long-winded video for you guys. So I showed you that starting back in order of market cap, NVIDIA at really nice support. Look at all these gaps in there and all the reactions I just showed you. Again, it's a support I think ultimately, like Microsoft, will go. And these are your next levels when it does, but probably bounce first, especially before Apple today. Alphabet, there's my 60 minutes. Still kind of, there's that same trend line I gave you on the daily on Alphabet. I wanted to make it a little fatter. And so still kind of in close enough proximity to the trend line. Apple, again, Apple's going to report tonight. So what just happened? I toggled to the wrong chart. Yeah, Apple, there's that bear flag pattern. Remember, I highlighted that a few weeks back. We were already short Apple, bear flagged and broke down. That we covered the short with impunity right at the low final target. And so again, look, Apple's in a holding pattern. Who wants to lay a big bet? Apple's, again, crowd favorite. You're in a bull market, so you're not going to have too many folks selling it or too many buying it. Again, if you're a gambler, I always say this: go to Vegas, you get free drinks out of it. Don't gamble in the stock market. So wait and see. So I won't be going very heavy long or short. I'll be going net short. I've been net short for a while. You know that in that swing trading account and even in the active trading account. I think the risk favors that we go to the downside after earnings, but I can always add back more short exposure. And again, as I've been saying, we're still not at that all-in moment. I'm going to put a little micro level right here because that's a little resistance level. But again, anything that happens right in front of earnings now, take with a big grain of salt, right? Well, because it can breakdowns, breakouts that happen right before earnings on any stock have a much higher rate of failing. The earnings can certainly override the chart, for lack of a better word. All right, Microsoft I already covered. Amazon also support. The support blue line I have here at 238.34 is a level I've had here and probably shared with you before. Created that back on November 6th, last updated late November 20th, 25. Why? Because you had a major reaction low right there. You had a major reaction high there, a big divergent high followed by a drop. Came up there again, rejected another key reaction high, or what we call pivot gap right there. And so that's another one that, before I took the NQ reversal that I posted, I looked at all these. I see these guys, see the NASDAQ down, again, almost 2.5% in front of them, Apple earnings report. And I say that's about it for today. They're not going to drop at 5% in front of Apple. It's possible, but it's be extremely unlikely. And Meta's post earnings noise. I didn't even look at Meta. It doesn't matter. But here's the line I've had here. Created that back in 2025, February 2025, and that's where it pulled back to today. So it's a line that goes back in time, even precedes this chart here. I'd have to go back here and you can see it. So this is it. So it's another one that pulled back to support. All right. Oh, okay. I know I always get it, and guys, I apologize. I move quick when I'm trading. Remember, I trade for a living. So first and foremost, I've got to get in these positions. I never front run on a stock. You can't front run the market because I'm not going to move the market. I don't have nearly enough money to move the Qs. Little cheap penny stocks always make sure we don't trade them off, and low price, low volume stuff I get out to you first. And I usually get all trade ideas out in the form of a setup first with an actionable entry before it even triggers. But on this one, what I'm getting at is I fired off the chart NQ because that's what I trade. Here's my QQQ chart. That's the same comparable level. Again, I looked at this. I just don't have time to screenshot 20 different charts. But there's, you can see all these reactions back here. Take that line across. You can see all these reactions, right? And so it wasn't a random reversal. And I do these videos because, I can't, all these little quick moves. Most of you aren't into active trading, in, out, in, out. I'll be out of this trade quite possibly before the video ends. This is about all I'm looking for right here. About another. So looking for a bounce of about 1.25%. And again, it's not a lot, but it is. If you reverse that 3 times, add it to a gain of 2+% on the day, make that 3+, then turn around and, especially if it plays out the next down. Again, it's just cycling. It's a term I use called velocity. Another one of my many made up terms. Velocity is, if you can get, 2% a week, multiply that out by 4 weeks in a month, or really 4.3, 52 weeks in a year. And you're blowing away the market. That's what you're trying to do. Now, you're not going to bat 1,000. You're not going to win them all. And that's what stops are for. So take your shots. Put your stops commensurate to your price target or targets. And it either works out or not. All right, I'm going to wrap the video up here so I can get it out to you. And again, the rest of the day will most likely be Probably a bit of noise, in my opinion. Like I said, this is probably where they're going to cap it at about 625, 40 or so on QQQ today. Would be my guess, at least before reaction. But then I don't go heavy. Then I kind of sheared most of the meat off the bone. I'll lighten up, and there it is on your comparable target on SPY right there. You could lift that line a little bit. We'll call it 696, yeah, almost 691 right there. All right, and that was, by the way, a reaction there. I could have had a line drawn there, but QQQ is my preferred trading proxy. All right, I'm going to wrap this up, get the video out to you guys, and then when I get a chance, I've got one other thing I'm working on today I've got to get done, and then I'll get the update on the long trade ideas out to you. I made a point to throw that new one out that I saw today if the market manages to hold up, especially, and it doesn't even have to, remember, unless the market implodes in a very, and I'm talking about that first one I got out to you today, team. Again, a lot of stocks can go against the trend, but in a strong, should the bottom fall out of the market anytime soon, and remember, once again, we only have half of the Mag 8 reporting this week. You've got, I think, the next 2 or 3 next week, and then it's going to be a full month before the 800-pound gorilla in the room, NVIDIA reports. So, however, when you have 7 of the 8 reporting, and they're the ones, remember, NVIDIA is being kept afloat. It's that giant circle jerk I've been talking about for a long time here, and others have then since talked about it or also talking about it. The circular, like circle jerk, the term, called a positive feedback loop, whatever you want, the money going between, the big spend from the big tech companies into NVIDIA, and then NVIDIA, throwing money into Chat GPT or whoever else, and is just going round and round, and that's been lifting the market, and it's actually clearly spilled over into GDP. It's also contributing, being one of the biggest contributors to GDP, which is normally it's just consumer spending, but this is so massive, this spend. And remember, that will at some point start to reverse. And when it reverses, that's where, for those that can't see how this market can possibly drop 50% or more in the foreseeable future, this is what we're going to watch. This is one thing here. It's not the be all end all, but it's a big one, right? I'm talking again, the circle or trade, the AI trade. And so once these, the theory is once the big tech companies, Alphabet and Microsoft and the likes, and Meta, realize they're not seeing the return on investment, and they start to slow their CapEx spending into AI, then that spills immediately over into the chips and NVIDIA and the other chip makers, which then spills into even the private markets and Chat GPT and the like. So, all right, guys, I'm going to wrap it up here. This has been Randy Finney with Right Side of the Chart. Have a great day.